Welcome to Explain the Charts. Today is March 15th, 2026, and we are looking at a very complex landscape for BTCUSD. Bitcoin is currently trading near $71,883, showing remarkable resilience despite a week of intense global headlines. The current news cycle is dominated by reports of Bitcoin whales resuming net accumulation as the price holds the $71,000 level. Data from Sentiment suggests that large wallets holding between 10 and 10,000 BTC are treating this area as a local bottom. Adding to this bullish momentum, U.S. spot Bitcoin ETFs have recorded a 5-day inflow streak totaling over $767 million. This institutional demand comes at a time when macro pressures are mounting, including revised U.S. GDP growth of only 0.7%. Geopolitical tensions in the Iran-Israel conflict have also pushed crude oil prices past $100 per barrel for the first time in years. Interestingly, while traditional risk assets and even gold have seen sell-offs, Bitcoin has reclaimed the $73,000 level recently. Analysts are divided, with some warning of a bull trap and others eyeing a macro yield signal pointing to a $100,000 target. We also see regulatory shifts on the horizon, with potential changes to Basel III capital rules that could further increase bank liquidity for BTC. However, the Bitcoin Fear and Greed Index recently hit a low of 10%, indicating extreme fear in the retail sector. This divergence between institutional accumulation and retail fear is a classic setup for a significant trend reversal. Let us dive into the daily chart to see how these news events align with the historical price action we have seen over the last year. Looking back at early February 2026, we can see the impact of the initial conflict escalation. On February 5th, Bitcoin suffered a massive 14.46% drop, plummeting from an open of $73,281 to a low of $62,181. This crash was largely attributed to liquidations totaling hundreds of millions of dollars as markets braced for war. However, the following day saw a sharp reversal with a 12.35% gain as institutional buyers stepped in to buy the dip. This $60,000 to $63,000 zone has now established itself as a massive structural support floor. Throughout late February and early March, we see a gradual grind back toward the $70,000 level. The daily candles show several long lower shadows, indicating that every dip is being aggressively bought up by large entities. This correlates perfectly with the news that companies like MicroStrategy continue to spend billions to expand their holdings. On March 4th, we saw a significant breakout attempt reaching $74,100 before the price cooled off into a consolidation phase. Currently, we are seeing the price coil within the $68,000 to $71,000 range, which often precedes a high volatility breakout. The volume has been steady, though lower than the peak panic seen in early February, suggesting a more calculated accumulation phase. If we can hold the $70,000 level on a closing basis, the path toward the historical resistance at $74,500 looks increasingly likely. Switching to the 1-hour chart to analyze the price mechanics of late February, we see the volatility more clearly. Notice the sharp decline on February 23rd, where the price dropped over 3% in a single hour to touch $64,203. This was a period of extreme uncertainty where the news regarding the Israel-Iran strikes first hit the wires. Yet, the recovery was orderly, with the price forming a series of higher lows throughout the next 48 hours. By February 25th, the price had reclaimed $69,000, illustrating how quickly Bitcoin can absorb geopolitical shocks. The VWAP levels during this period show that the average price for institutional traders was consistently being defended. When the price dips below the VWAP, we see a surge in transaction counts, signaling high-frequency accumulation. This hourly data confirms that the $65,000 to $66,000 area acted as a crucial reaccumulation zone before the March push. We can also see that resistance began to build around the $70,000 psychological level as early as February 25th. Understanding these micro levels helps us identify where the current support might hold if we see a pullback today. Now, let us look at the 15-minute chart for the most recent action between March 10th and March 14th. On March 13th, we had a massive surge in price, peaking at $73,968 as FOMO-based buying drove the market. This move coincided with news that Bitcoin was outperforming both tech stocks and precious metals. However, the price was unable to sustain the $74,000 level, leading to a quick pullback to the $71,000 range. Note the high transaction volume during the peak, which suggests a liquidity grab, where long positions were being filled. Since that peak, the price has been consolidating in a tight range between $70,500 and $71,200. The 15-minute candles show a very flat VWAP, indicating a temporary equilibrium between buyers and sellers. This coiling behavior often leads to a banana split pattern as identified by veteran trader Peter Brandt. A breakout above $71,500 on this time frame would likely trigger a retest of the $74,000 resistance. Conversely, if we lose the $70,500 support, we might see a quick trip back down to test the $68,000 daily support zone. To recap the important levels, our immediate support sits at $71,000, with a major macro floor at $63,000. On the resistance side, the $74,000 to $74,500 zone is the ultimate gatekeeper for a move toward $80,000 and beyond. My unbiased bullish prediction is that we have a 65% chance of testing $80,000 within the next month. This outcome is highly dependent on the continued ETF inflow streak and a potential de-escalation in the Middle East. If oil prices begin to fall, inflation fears will subside, allowing risk assets like Bitcoin to flourish. The bearish scenario carries a 35% likelihood, primarily if we see a death cross on the weekly charts as some warn. A drop below $60,000 would invalidate the current recovery and could see a downside target of $51,000. Look for the outcome of the March 17th Federal Reserve meeting as a massive catalyst for the next leg of this move. If the Fed holds rates steady despite high inflation, it may reinforce the narrative of Bitcoin as a safe haven lifeboat. As always, please remember that this analysis is for educational purposes only and is not financial advice. Do your own thorough research and manage your risk carefully before making any investment decisions. Thank you for watching Explain the Charts, and we will see you in the next one.